Hi there, Greg Lewis, Metastock Software. Hey, you're about to watch a recording of the April 2017 Online Trader Summit presented by Metastock. This quarterly event, put together by our own Jeff Gibby, highlights some of the industry's best traders, and I know you're really going to enjoy it. Hey, if you haven't tried Metastock yet and would like to have an extended 3-for-1 trial, visit metastock.com/traders-summit 3-for-1, or just click one of the things provided and get your free trial. Thank you, and I hope you enjoy the presentation.
Let's get to Oscar Carboni. I guarantee this will be an entertaining session. We had him speak last year at our Las Vegas user conference. He was so entertaining that I decided to bring him on here today and let him talk to kind of all of you guys. So, Oscar, let's go ahead and turn your microphone on. Let's start there. Make sure we can hear you. Oscar?
Yes, can you hear me?
You sound beautiful to me.
Beautiful.
And you look very handsome too.
Can you see the camera?
Let's see. That's on a different screen.
Let me turn that on.
Don't see it yet.
How about now?
All right, I see you. Yeah, look great. Okay. I'd like your uniform.
Well, thank you, thank you.
All right, let's make sure we get your screen on as well. So I'm gonna go ahead and give you that right now. And now it should just pop up a message that says, "Do you want to share your screen?" And I can see your screen. See, yeah, isn't that easy the way this works?
Simple, simple, simple.
All
Love
right,
it.
the floor is yours. I'm getting out of the way.
All right, so let me just move things around so I can see everything at once, and we should be good to go. All right. Let me know when I'm presenting.
You're on.
I'm on. Okay, so the way I would normally start my presentations is good morning, good afternoon, good evening, traders from across the globe, which I'm sure many of you are. Welcome to the seminar held by Metastock. Metastock is a company I've literally been working with, using since I am 18 years old. Started down on the trading floors in Manhattan, worked down there while I was in college at night, worked on the floors during the day, stayed there for my entire life. Learned from many, many of the masters, but I have to tell you, Metastock was there right from the start. In fact, oddly enough, I'm customer number 11. In all of the Metastock customers, I'm customer number 11. I've been there for that long, and I've tried almost everything else under the sun over the years. What I have found is that Metastock happens to be about the best program out there to give yourself accurate, simple analysis, which should help you forecast future pricing. And that's what we're going to speak about here today. But I do have a feeling many of you don't know who I am, have never seen me before, haven't been to my live trading room, to my website, haven't watched any of my videos. So if you don't mind, if you'll humor me for just a moment, I'm going to show you a quick 2-minute video. That video should show you the power that Metastock has unleashed on me, which I've unleashed on the public. I've been doing videos and showing what I call my Omni, Oscar's Market Navigational Indicator, for about 11 years now. Let me show you a quick clip, something that you might find interesting. Please humor me, this won't last very long. Jeff, can you see the video that's about to come on in front of you? I'll take that as a yes. So watch this for a moment. You should be able to hear it as well.
We spoke in yesterday's video about a possible rounded top in this S&P. We had a top, and we put another top in a little bit lower a few days later, and we put another top in that's sort of rounded. If we do not take those tops out tomorrow or the next couple of days, then they're going to push them right back down again. However, if that rounded top gets violated towards the upside and NASDAQ makes new highs, away we go. And if you guys recall, for months on end, I've been saying the 1577 level has been my target since this year began.
Traders, 1577 was Omni's target in the beginning of 2007. That video was dated in 2007. I do videos every night. So in 2007, I was doing videos saying, I think the top is coming in at 1577 according to my Omni. The high of the entire move before the crash was 1576. Within $1, the Omni identified the high before the crash. But that's not all. Watch this. We will continue now with this analysis.
Three times a charm is what I have learned. So, if you bulls want to make a case, don't start today because I expect this to be way into next year. I think we can see as low as 668 in the S&P traders. 668. We can go that low while we're producing what could be that inverted, big bottoming inverted head and shoulders.
Traders, the low of the entire crash was 666. When we were trading at 15, Omni told us we would go to 668. It went to 666. When we got down there, the Omni then changed directions to bullish, and watch what happens next. And this is what put me on the map, so to speak. So there'll be another quick clip, and we're out of here. We'll go into our presentation.
Now, traders, this is a bold statement, but you know me, traders. Any of my long-term video fans, when I make these long-term projections, we have not been wrong on our long-term outlook at all since we've started these videos. You take a look at the 561 videos that are out there, and you will see whenever we've made long-term projections, those videos turned out to be absolutely right. My projection for this year in the S&P, and I'm not saying it's going to be a top by any means, and I'm not...
Traders, look at the date. It's only the beginning of 2010. I'm going to tell traders, now that we hit 666, where we're going to go next.
Saying when it's going to get there, but I am going to say this. The bull market is going to take us to the levels of 1290 to 1300 in the S&P. I think that we at least go there, and then we'll see what happens. 1290 to 1300 this year.
Traders, what happened? We rallied all the way to 1290, and 10 days into the new year, it's closed at 1290. My target was right within 10 days of the exact spot. The whole year we went up. We didn't hit 1290 by December 31st. We did by the 10th day of January. That is strong analysis. That is the analysis that I'm able to do using Metastock. And now I'm going to take you down a little road. There are many, many systems out there. Some work really well. Some don't work well at all. It depends upon how you use that system. But many of those systems are complicated and require variables that the rest of the street doesn't see. And what I've learned in my 36 years doing this is if you are doing something that the rest of the street has no clue about, it's not going to work consistently. Let's see why. One of the things I'm going to show you, many of the things I'll show you in this webinar, are formations, classic formations that started 50, 60, 80 years ago. But then someone like Oscar comes around and reinvents these same formations. And if I'm right about this, many of the calculations I get off these formations now would absolutely surprise the inventor of them. He would be shocked that I've learned how to use his product probably better than the inventor himself. And let's go forward. These are what I like to call bull flags, traditional bull flags, and what they generally will tell you is that when the market gets out of the flag, it starts to rally. It wants to go higher. There are many different types of flags. There are bull flags, there are bear flags, there are pennant flags, there are F flags, which is an Oscarism and we'll get to. But the idea behind it is if you can spot something this clear, the whole street knows it's there. It's simple. It's before your eyes, and most of the street knows what to do with it. And in that case, you know what should happen? It should probably move forward because of the momentum of the amount of people that recognize what a bull flag is and how it works. And if you don't know how to use simple formations like these, you come down to livewithoscar.com, hang out in my free trading room, and I'll show you. But let's just see what these opportunities look like. If you see a bull flag building, you can rest assured at least this much should happen for you. Maybe you won't be able to catch a big move, but if you look at bull flags and trade them properly, if it's a bull flag, you should buy it every time it gets down to the line. Here, we buy this. Gets down to the line, you go long. When it gets up to the top, if you are still in that trade, you do not ever go short. You literally simply exit the trade when it hits the top line. Gets back to the bottom line. Now, this is simple. I get it. Gets back to the bottom line, and you buy again. But you do not ever sell short at the top. Never, ever. At the top, we exit trades. Why? Because if you exit trades at the top and not go short, this will never happen to you when the market takes off through the flag and starts to make its projection. So it's okay to be long down here. It is not okay to be short at the top of a flag. It does not work that way. Buy, exit, buy, exit, buy, exit, or when it gets through again, we buy and continue on. Now, there are absolute guaranteed projections that go with these flags. Nothing is guaranteed to work, but a flag has a guaranteed projection. If it will work, it should project exactly where you will go next. And here's what I find interesting about the flags I'm seeing on the daily E-mini S&P chart. A nice looking, well-defined flag, and it moves higher. Another nice looking, well-defined flag. We are starting to move out of that flag now, but if you ask me, another little baby bear flag has just built. Let me darken this in a little bit for you. So it's interesting how just these little flags and big flags and flag after flag continue to propel the S&P higher. So yes, this is a simple approach, but wait until you find out that the simplest approaches in this business are the ones that actually work out best. The more complicated the approach, the less chance you actually have of the market understanding what you are doing. So look at that bull flag breakout and another bull flag, and you stay in. Lots of great trading opportunities inside the flag. And look at this. This looks like the possibility of a baby flag, which many of them are, and it'll just take off. Now, the bear flags do absolutely offer fantastic trading opportunities, but everyone on this planet recognizes that you don't do any of this without the use of a stop. A stop in our industry is absolutely your best friend, and the reason why we use stops is because we are human. And as humans, we tend to do things like, the market's going against me, let me stick my head in the sand and not do anything about it. Well, that's not supposed to happen. What should happen is your stop gets elected if, in fact, you were a buyer of this down here and it goes lower. You should get knocked out of the trade and not get too abused by the flag. Meanwhile, you bought and sold and bought and sold and bought and sold, and if you get knocked out, so you probably did all right overall. So there are ways to use these standard formations to capitalize, and I think you'll see a lot of that. So this is your daily E-mini S&P. So dailies and weeklies, which I'm going to show you now, usually don't look similar. They usually look very different, but I have found something very interesting here. Let's just show you what this one looks like. Let's look at an E-mini S&P weekly. You've got two fantastic flags on this weekly as well. There's an F flag, which is basically an Oscarism, if you will. It's a flag I've worked on for many, many years to figure out if it was bullish or bearish and how to project from it. We will get into things like that if you come to my live site. I don't want to spend the time here at Metastock seminar to teach you my techniques. However, I will show you some techniques that no one's ever seen before that work really, really well. Nothing 100% of the time, but that work really well. I'll show those to you if you hang out with me at my site. But here's an F flag. F flag works. Bull flag begins to form. Now, this is a bull flag on a weekly. You have to recognize each one of these bars is a full week's worth of trading, Monday through Friday. Everything that ever happened and the settlement all is in one bar. So weekly flags or weekly formations themselves tend to take way too long to pan out. None of us have the patience for this, where most of us are day traders that hang around the Omni. We don't have patience to be in a trade for weeks on end to see what it's going to do. But fund managers, people who have 401ks that never flip them around and just stay with long positions, these are very, very interesting formations for those type of traders. And as you can see, once you break out of a bull flag in a weekly, it tends to continue for quite some time, because remember, it took 1, 2, 3, 4, 5, 6, it took 10 full weeks to build, and then it breaks out. This one, 2, 4, 6, 8, this one took 9 weeks to build. It's a long time. So then the projections tend to work really well, but using flags in weekly markets tends to not work well because we have no patience to wait 57 weeks to get our fill. So just wanted to show you that the dailies and the weeklies are absolutely in concert with one another right now, and that's sort of rare. So interesting what's going on there. Now I'm going to show you other charts. If you ask me, this one market right here is the best specimen on the planet for going over daily analysis. This is called sugar. The sugar chart daily will give any analyst a run for his money. It will make any analyst feel like he's gone to a Six Flags Great Adventure theme park. I kid you not. Let me show you. I just showed you a couple of flags, right? Simple stuff. Let's just take a view down sugar's history. This is a daily bar chart. On this chart, I can show you almost anything that's useful in technical analysis. You've got a wonderful channel here. Once again, you would handle a channel the same way. If it's a bearish looking channel, meaning it starts at the top left of the screen and heads towards the bottom right, no matter what anyone tells you in the world, that is a bear market. Just see it with your eyes, recognize it's bearish, and don't listen to anyone in the newspapers. Know you're in a bear market. Now, how do you trade a bear channel? You sell the top of the channel, you exit at the bottom. You never buy long at the bottom of the bear channel. We sell, exit, sell, sell, exit. We don't get long. The market doesn't go anywhere, doesn't go anywhere. If you want to exit a trade that you've been in, fine. You are not going to get long on anything in here. Why? Because we don't want to take a long position. We want to be exiting shorts at the bottom of these parallel channels, because eventually what will happen at the bottom of your parallel channel is this. Away you will go, and you do not want to be long. You want to be in a pattern of, yes, I sold it up here, I exited here. I sold it here, I exited next time it was here. I sold it here, I exited. We missed the sale, but we were not long at the bottom. So if you handle these techniques properly, you will be able to make profitable trades. Of course, we've got stops in. Not every trade is going to be profitable, but you can see that there are patterns here. And I'll tell you right now, I am a creature of repetitive patterns. So on this sugar chart daily, you've got a parallel channel. Look, I can show you an example of a pretty little double top right here. Nice little double top. The market dumps. What's it dump into? Oh, look, another technique. How interesting is that? It dumps into a bear flag. What does the bear flag do? Exactly what a bear flag should do, projected lower. What else can we find? This sugar chart's got everything. Let's slowly move forward. Now we see a 200 bar moving average starting to form. We've got over 200 days on the chart. The average begins, and we continue to move forward. Oh, look, I can show you a V bottom, a piece of analysis that actually worked fantastically well in 2009, March 2009, in the E-mini S&P. It's called a V bottom. These V bottoms really work well if you know how to call it properly. In conjunction with the Omni, which is Oscar's market navigational indicator, and these formations I'm showing you, I am able to make some of the best calls I've ever seen in my life. Maybe the best you may have ever seen in your lives. If you watch some of my videos, hang out with me in my live chat room, I'll bet you I can show you some of the best calls you will ever see in your life. It shocks me when I can do it, but it's not me. I am Omni's messenger boy. I am a chart's messenger boy. I read the chart, and I give that message to my traders. So I am just clearly, simply reading the chart, and I can teach each and every one of you how to read charts if you hang out with me in my trading room. So the 200 bar moving average turns out after the V bottom. We run up to the 200 bar moving average, but it fails, right? See the failure here? It didn't go up, it went back down. It goes down, goes back up, fails again at the 200 bar moving average and heads down. But then this takes place. Bingo! Every fund manager in the world just woke up when this happened because it rallied above the 200 and stayed that way. So what that tells you is that the fund managers on this planet are all hitting buttons and making phone calls and calling clients and saying, this particular market right here, it doesn't matter what market it is. This particular market is about to move higher. So it's above the 200 bar moving average, which I call the fund manager's blue light special. If you hang out with me in my trading room, watch my videos, I'll refer to this often. And I know because I grew up on the street in Wall Street, I know they're all charging in when they see that average, and I love playing around that average. So more technique, right? We had the double top, we had the little bear flag back there, we had the channel, we've got the V bottom, we've got the failure, and then the victory, if you will, of conquering the 200 and moving higher. We're still on the same sugar chart. Let's move forward. What happens next is just insanity. This is a chart that completely telegraphed itself like you've never seen before. So let me show you how that's panning out. I think you're going to like what you're about to see here. So check this out. As we moved over and time started to pass, we rallied up off that 200 bar. We rallied through the 200 bar, made a bull flag, got out of the bull flag, rallied higher, and a left shoulder of a monstrous bearish formation took place. It's called the head and shoulders formation. There is a left shoulder, there's the head, here's the right shoulder. Picture this as a human being standing there, head, shoulder, shoulder. It's called the head and shoulders. This generally will tell you that a market is topping out. Now, the head and shoulders has to be broad and massive. It cannot be something as small as just this red shoulder. It can't happen in something as small as just the head. It's got to be massive and take up the whole screen. If you see that, you're basically starting to note or notice that a topping formation is happening. Does it have to top out? Of course not. Will it top out? Watch what happens. So we have the bull flag. It creates the left shoulder, goes up into the head, comes back down, months start to pass, goes into the right shoulder, gets under the 200 bar moving average. It gets back involved with the 200. Now, keep something in mind. You were clear of that 200 bar moving average since we got above it, and I showed you how we had gotten above it and back on the left side of the chart. You stayed away from that average, stayed away from the average, stayed away from the average, started to get closer to the average and building a bearish topping formation. Boom, you hit the average. It gets tested. It rallies back up, comes back down, hits the average again, gets under it. Now you've got a failed 200 bar blue light special. The 200 bar moving average is broken. So if you ask me, that's a failed blue light special, if you will. On the way down, it creates a bear flag. Look at this wonderful bear flag that we're in right now. Look at this. Bear flag, another bear flag, and I'm just going to darken them in very quickly for you so you can see what they are. And believe me, we're not done yet. I'm just showing you some cool stuff. Another bear flag, and I think you can see the others, but let me make this dark just for the visual. So when you breach the 200 bar moving average in the right shoulder and drop with a bear flag into a secondary bear flag, and these just start to happen like crazy once the signal hits. And boom, here we are, more bear flags in a row coming out of the red right shoulder. Fantastic look. Kind of easier to spot good trades right now than it would have been without the flags. So you got the shoulder into the flags, more flags, down we go. Bear flags turn out all over the place once you breach the right shoulder and you broke the 200 bar moving average. That, my friends, is how you read a chart using simple technical analysis. And I kid you not, it's probably the best analysis on the planet. When you use simple analysis, it is likely the best analysis that you will ever use. So looking once again, look at all the insane techniques. And I didn't show them all to you. There are many techniques on this chart that you didn't even see. So from the parallel channel to the double top, bear flag, V bottom, 200 bar moving average, how to use that. Head and shoulders with the bull flag on the left shoulder, bear flags in the right shoulder. Fantastic stuff going on here, traders. This is what we should be looking at. You should be happy to see all of this, and you should know how to use it. And if you don't know how to use it, absolutely you should be hanging out with me in my live trading room. I can show you how to use it. So let's move on. So now I've showed you some charts with clear techniques, and they look like they work really well. Do all of them work really well? Let's move along and see. I am going to show you another chart now, and of course, all the techniques that we can come up with in technical analysis do not work well all the time. They couldn't possibly. Let me see if I've got a crude chart for us, because that's what I wanted to show you. Oh, yes. Now, I'm going to take you down a disastrous road. This is the crude oil chart. This is the anti-analyst chart. This is the chart from hell. Now, don't get me wrong. I called the top on television in crude oil 2 years ago. On television, I called for $45 in crude when we were trading at 103. And I kid you not, the host on the TV said, "Stop, get up, get off my set. You are a lunatic, Oscar. You're a nut." And I said, "Why am I a nut?" He said, "You tell me the crude's going to go from 103 to 45. I said, "No, I didn't tell you that. The chart told me. I am giving you a projection, and I'm very good at what I do." And he threw me off the set. Well, it didn't take more than 8 to 9 months. We traded from 103 all the way down to 45. They brought me back on television, apologized to me, and asked me how I made such a grand call when no one else expected crude to break down. How did I do it? The use of Metastock and knowing my market. So now we're in crude oil, and check this one out. It doesn't work well with flags at all whatsoever. In fact, if you try to use flags in crude oil, you are going to lose your money. You can't count on them working backwards because that's, for me, too bizarre to even consider. But I know they don't work really well traditionally, and let me show you what I mean. This is crude. This is a beautiful bull flag, but look where the market went. In fact, let me just grab a little something, a little circle, a little thing to pull around here so we can all see. I'll make it yellow. Everybody gets to see it, and I can present. All right, so check this out. Here's a beautiful bull flag. Technical, looks fantastic. Textbook. Market goes down. It's failed. What do you mean the market went down? That's a bull flag. I lost money, is what will happen to you if you try to use these in crude. Another bull flag. The market goes down. Oh, come on, crude. We were betting on the upside. Aren't you a bull flag? But it's crude oil. Another bull flag. This is a massive bull flag, massive failure. Why? Don't ask me. Crude just does not work well with flags. In my presentation, in the write-up of my presentation, I told you I would send you home today with things that you can use tomorrow. That's what I am doing right now. Pay attention. Flags do not work really well in crude. They work almost exact opposite. This could at least save you money if it doesn't help you to make a few coins. So, bull market. I guess I just have to click yes on here. Sorry about that, kids. Bull market, bull flag, what happens? It goes down. Look at this. Once again, we go down, we make a bear flag. Now, bear flags are supposed to make a market go lower. It went up. Insanity, right? I mean, it's just insane how uncannily backwards the crude oil works with traditional flag formations. So we rallied up, and this is, believe it or not, a bull flag, little one, which failed. Bull F Oscarism flag. Came down to another bear flag, and this is where we are right now, top day. This is Friday's trading. On Monday, we're going to move. Now, a bear flag should tell you we're going lower. I have to say, for this coming week, it should go up instead of down based on the bear flag because they don't seem to work properly. They work opposite. This bear flag projected up. Why shouldn't this bear flag project up? This bull flag projected down. This bull flag projected down. This bull flag projected down. It doesn't even make sense. But that's how crude oil works with traditional analysis. So what I will tell you is the analysis works really well. Recognize that crude is a different animal, and the techniques tend to work in reverse. So keep those in mind when you spot them. So I showed you how techniques work well, but not all of them do. We don't live on planet Utopia. So you have to know which ones work, which ones don't, and which markets you should apply them in. And here's the beauty of that. 99% of the markets that you trade or that you want to trade, stocks, commodities, ETFs, these flags do actually work well. So do channels, so do head and shoulders, so do double tops and triple bottoms, and however you want to call these different things. They tend to work really well in most charts, not in crude oil. Crude oil requires strict adherence to the Omni, Oscar's market navigational indicator, because as you can see, traditional formations don't hold water, if you will, when it comes to crude oil. Now we are going to move out to another chart. And in this chart, basically what it's going to show us is, as I've been expressing in my nightly videos for the last few days, gold is in what I call a quagmire. It's in a place where there really is no way for sure to tell if it's going to go up or down, but what comes next will be big. Now, what gives me an edge is I have an Omni on top of everything I'm going to show you, and the Omni will tell me if it's going up or down. So let's move to a gold chart, and yes, we will absolutely get onto some stocks as well. Let's move to a gold chart. And here we are, gold 200 bar moving average, and I call this piece of artwork gold daily and the 200 bar moving average quagmire. And that is what it is. The bull flag right here, well, let's not go there yet. What you have is a market that spent quite some time coming down. The gold market spent a lot of time coming down since the crash of 2008-9 when it rallied. When the S&P rallied, S&P crashed, the gold rallied. Well, gold spent a lot of time coming down, and then it gets down to its 200 bar moving average right here, has a violent bounce off of it with this bar, and breaches. Boom! 200 moving average breached. Guess who's on the phone next? You got that right, the fund managers. Rock and roll. Hey, everybody, gold broke the 200. Do you want to participate in our next trade? We're going to go short, is the likely event for fund managers when they see a clear breach of the 200 bar moving average. And it worked, right? All the way down you go. Rally back up towards the 200 bar, nothing happens. Go back down, rally up again, you get above it. Interesting. Now we're above the average and almost at the same height that we broke the average. Very interesting if you ask me. So now we've got this flag right here. Bull flag sitting over the average. However, if you ask me, it's getting slightly long in the tooth, the bull flag. It's becoming questionable. Why? Because the flag itself now is starting to become as long, if not longer, than its pole. Right? See the flagpole here? Well, the flag itself is starting to become almost as long as the pole. If the flag is as long or longer than the pole, it's actually not a flag. It's morphed into something different. So I just wanted to share that with you because it might not actually be a bull flag. Now, if it's getting long in the tooth, this is what I'm spotting inside of this bull flag. Let me move it out of the way just for a moment. Let me just move this bull flag out of the way for a moment and show you what it could actually be morphing into. You may have a little bear pennant flag right here. So let's darken this in so you can see what I think I might be seeing. This right here might be a little bear pennant flag building that was inside of what we thought was a bull flag and turns out to not be, but a test of the 200 bar moving average. Now remember, we are day traders and this analysis changes every single day. It's bullish one day, bearish the next. I'm only looking for what's going to happen Monday, Tuesday. So instead of that being a bull flag, if we remove the flagpole and we remove the flag and look at it and say, well, maybe that's a pennant flag, a bearish one, getting ready to break the 200 bar moving average. That is a possibility. Or it's a bull flag and it's going to hold the 200 bar moving average. That is a serious possibility. If you ask me, that's a bit of a quagmire. What is a trader to do right here? Is it a bull flag? Well, it sure looks like it could be. Is it a bear pennant flag building at the 200 bar moving average, getting ready to breach it? Sure could be. So what else do we do to figure out the quagmire? Well, the next thing I did was I went here. I said, well, there's a reason. There's something that you can look at to tell you which way the gold can possibly go. And that's the dollar. Why? Why did I come to the dollar index to see where the possibility of gold to go next? Because gold, down here on my little teeter-totter here, gold is priced in dollars. Gold is priced in dollars. What does that mean? That means that it's like a seesaw or a teeter-totter. If the price of gold is going to go down, the price of dollars will go up. That is the way it works. If the price of gold is going to go up, the price of dollars is going to go down. That is the way it works. All right, not every day, not every trade, but generally, that's what you'd expect. Gold is priced in dollars. Well, if that's the case, and gold is sitting at the 200 bar moving average with a bear flag or a bull flag, we can't tell, so is the dollar. Now, here's what's bizarre. It is not supposed to happen. You're not supposed to have the dollar and the S&P both have bear flags, both going down below the average. They're priced against one another. One of these two is going to hold this 200 bar moving average and take off. It's either the dollar that's going to take off, hold the average and run, or gold is going to take off, hold the average and run. Now, you've got the dollar index in a downward sloping bearish channel, right? No arguing there. Downward sloping bearish channel goes into a much more accelerated bearish channel to the 200 bar moving average. And this possibility of this being a bear flag is pretty darn high. So this tells you that gold should likely go up the little bear flag, but the 200 bar moving average is bigger than a bear flag. It's bigger than anything out there. So until we break or hold the 200 bar moving average in both dollars and gold, you're not really going to get your move. You will get an extended move once one of these two break away. So you have a gold quagmire, and it's probably very much because of what's happening right here in your dollar index. Does everyone understand that? It's pretty clear, isn't it? They are both in the same position. They both cannot stay this way. One of them has to go in one direction, and the other one has to go in the other direction. That is the way the game plays. So going forward next week, you need to be looking at this and see where gold's going to go. I'm blessed. I've got Omni. It's going to give me an arrow. I didn't show you Omni, and I won't do that in this webinar. I will show you Omni if you come hang out with me. I don't want to take away from Metastock. These guys are fantastic. I want to show you their product. So let me move forward now. Some of you mentioned stocks. Oscar, do you trade stocks? Wait until you see what Omni and Metastock does with stocks. My goodness. You're going to fall over. All right, so let's move out to a stock. What do I have? I must have something. Yes. Oh, I love this one. Here is a gift I am going to give to each and every one of you that you can use for the rest of your life. Remember, Uncle Oscar gave you a gift during this webinar. Not only am I going to give you a gift, I'm offering you a free 2-week trial. It's actually $1 because we can't do them for free. I'm offering you a $1 trial to my daily trading recommendations. You'll find out about that. Let's go back to the charts. So a gift to all. Let me show you how this works. I think you're going to love this one. This is a stock called Chipotle, CMG, Chipotle Mexican Grill. It had been in the doldrums for quite some time. And right about the price of $4.20, Oscar started putting it in videos and saying, oh my goodness, breakout in CMG, this stock's going to be fantastic. How did I know? Well, this dotted dashed line, you know, it's the 200 bar, it's the Fund Managers Blue Light Special, so I know they're watching. Not that I care much about it, but I want to always know what the fund managers are looking at. So I keep it on the chart for reference. I don't actually buy and sell above or below the 200. I'm a day trader. That's more for fund managing, but I like to know what the fund managers are doing. So Omni's calls aren't based on the 200, but you know most fund managers out there are. So here we are, Chipotle, and if I go back, you'll see the stock has been just hammered and beat to death. Look how high it was. 770, beat to death, all the way down, 400, 300, poor stock. Oh my God, what's happened to Chipotle? Poor stock. Well, it's not so bad. Wait until I show you. Let me see if I can just get this a little more into focus. Hold on a second. Just want to show you everything on the chart. Okay, so here we go. So Chipotle starts to get above what I like to call some sort of a big pennant. Look at the size of this. It's a huge pennant, basically, is what it is. So If you've got this huge pennant here and you know how to use a pennant, you know how to come up with fantastic formation projections. How does that happen? Watch this. I start recognizing that there's some support building by drawing my line from here to here, then it extends to here, and as the market builds, it extends to here. Eventually, as the market moved along this area for the last few months, my red line grew and I had a nice support line. Well, at the same time, as it was rallying, it would hit and drop, and hit something and drop, and hit something and drop, and hit. So, of course, I started drawing lines across the top of those highs. So I defined the bottom of the lows, the tops of the highs, and I recognize, ooh, I love these. I've got an apex. It's a formation I can trade. I know how to deal with these. So when you look at this, here's how, and here's my gift to you. When I started talking about Chipotle, we were right here. People thought I was crazy, but I told them, nope, this is it. What just happened here tells me to tell you it is time for us to start paying attention to Chipotle again. It was a beaten stock since they had their salmonella, if I remember right. They had their salmonella problem. Chipotle went from 770 to 300 and change, and it stayed flatlined from there forward. As you can see, it just flatlined. It stayed flat for some time. Omni gives me a signal, so I go looking to see what that signal is. I recognize we just get above the red line, and here is the wonderful thing that happens next. It does blow out, and it turns into what? A bull flags. The first thing that happens is it goes off into this bull flag. Let me see if I can darken it in for you. So you get a nice bull flag. Absolutely expected something to happen over here, so it makes sense. And as I told you in the beginning of this webinar, these things really work well if you know how to use them. So let me just darken this in. You have to see the visual here. This is going to be one of the coolest things you'll ever see in your life. All right, so we do break out. We break out into the flag. Things are going exactly as expected. So what does that tell me to do? That tells me to make my projection, which I had already done. Once we broke out here, I made my projection on Chipotle, and I called people and put it in videos, told everybody where it should go, and wait to see how it gets there. So how did I come up with a projection? Well, now that I have these support and resistance lines, I recognize that because they're wide out here and they get closer here, it is a pennant, which will come to an apex at some point. And Oscarism technique of breaking out of pennants, I have a couple of them. Here is one I'm going to show you how to project how high the market will go. So everybody paying attention, because you're going to like this. So I've got my lines at the top and bottom of my apex or pennant, and basically the way I do this, my pennant stops here, and I'll show you why. The reason why I stopped counting here and not back here is there's nothing else down here. So I don't want to have blank space on this red line and call that the back of the pennant. So I'm calling this the end of the pennant. This is the end of it right here. Okay, so I'm going to darken in this trend line so I know I'm at the end of my pennant. Here we are. And now I want to do my calculation. What's my calculation? I basically, and this only needs to be visual, by the way. You do not have to have an actual calculation. No calculator, no anything. Use your eyes. I looked at it and said, well, halfway between here and here is about here. Halfway between here, the breakout, and here where it started is about here. I simply took a trend line. Now, this is the technique I want you to learn. I took a trend line, put it right here, and said, now that I have the range of the middle, dead center of my formation. Watch what I do now. I'm going to drop it right here at the breakout point and watch what my projection shows me. Boom. How about that for a projection? This formation told me we should get to here. It went just a tad above and started to drop. That I have to give a round of applause to technical analysis for. Nothing tends to be that accurate but the things I am showing you. I have seen lots in my time. I've never seen anything this simple work so well. Once again, let me show that to you. I simply went to the middle, what I consider just visually the middle of this formation. I measured from top to bottom of the middle. I took that line and dropped it at the breakout, and it gave me my projection. Once the breakout takes place, you can do your projection. That is very, very interesting. Now, I do see something. You have to draw your trend lines accurately, otherwise everything I just showed you goes out the window. Why? Well, if this flag was written incorrectly, it would be like this. If it was drawn incorrectly, it might look like this. It might have all sorts of weird things going on. You're going to buy and sell at the wrong places. Your flags have to be, your trend lines have to be exact. If you have them incorrect, you've got a problem. You want to learn how to draw trend lines? Let me know. Let me show you another stock. I think you're going to love this stock. This stock is AGN. Here's AGN. Back to the traditional analysis that we started this webinar with. Interesting specimen, allergen. What does this chart tell you? Did anyone learn anything at all from the techniques that we just looked at? Not that you should have learned, but anyone pick up anything? What is this stock allergen telling us right now? Bullish, Ali, correct. I absolutely agree. Now, does it have to go up? Of course not. We'll put our stops in case, but this should absolutely be bullish. Look at the flag here. Look how well it worked. Rally, rally, rally. 200 bar moving average gets breached, broken on the upside, rallies further, starts to create the flag, breaking out of the flag. You have seen the projections, kids. This absolutely works. Now, this is the tip of the iceberg. I only illustrated or presented the simplest of the techniques that we use. I didn't show you the Omni at all. You have no clue how I can make the exact where to buy and where to sell. All of that will happen live in my live trading room, which is free. You don't even need a credit card. Just join me in my live free trading room, and you can hang out with me. Sure, I'll give you a target on AGN. You can hang out with me. We speak techniques. I live and breathe in this chat room. It is what I do. I just live there. You know what I mean? Whatever happens around me happens while I'm in my chat room. So what should happen with this bad boy is minimum 256 to 260. It should be up here. You should end up coming somewhere up here based on this flag. Maybe even higher, but this is your minimum projection, somewhere up here based on the flag that you see. The beauty of stops is as the market moves higher, we trail the stops if you're in a stock. So the stock stops and stocks, if your company even accepts them. I know NASDAQ doesn't, but most ECNs do accept the stops. You trail your stops and you get yourself out of the trade when it goes down too far. So what would you do? If this market starts to move higher, the second you get above this flag, you pull your stop to the high of the flag, and you've got, profit locked in, free trade running. If it continues, great, it continues up. So certainly we've got projection off the flag. I didn't actually show you how I made that projection. Some of that I will keep for when you join my service or come out to my seminars. But as you can see, I absolutely know what I'm doing here. I know how to put this stuff to work. I know how to tell you what's coming next. I can't always be right, but I am more right than anyone I've ever met in my entire career. And you will see that if you hang out with me, watch these videos, stay in my chat room, and if you use these techniques, you will find for yourself that you can come up with the same work that I come up with. There's no mystery here at all, kids. I can show you how to do it. You can show it to yourselves. I do not look at candlestick charts. There's a reason why I don't look. The reason why I don't look at candlestick charts is there are too many variables in candlesticks. Just too many variables. You've got a wick. You've got a body. Is it full? Is it empty? Really? I just want a daily bar so I can go to work here. What are you giving me so many variables for? That's my take on that stuff. If you get to know me, you'll find out I've spent many years writing programs about candlesticks. I don't use them anymore. I don't think they have as much merit as we thought they did 30 years ago. So I would like to, I'll take some questions. I thought I would turn this back over to Jeff because in all honesty, I don't have anything here I want to sell you. I don't have a product I'm going to sell you. I just want you to come on down to my site, jump into my chat room and hang out with me. We hang out together. I'll show you what we're doing. There is a service that you could purchase if you want, but 99% of what I do is zero, free. Come hang out with me. This is what I do. I used to stay in the pits. Now I stand here at the screen. I like having my friends around me. You guys would be my friends. So, Jeff, if you wouldn't mind, if you would let them know that we have an offer for them and they can join my recommendation service absolutely free. Well, again, I can't get the programmers to make it happen free, so it costs $1. But you can get a 2-week free trial for $1, a 2-week dollar trial, and I think you're going to love what you see.
Now, to do that, Oscar, do they just go to livewithoscar.com?
Yes, here, let me show you. You would just go to livewithoscar.com, which is on your screen now. You can upgrade your membership here, but I want you to come in my chat room. Click the chat. Come on down here. Go into the chat room, and that's all. Just join me in the chat room, and we will be fine together. From there, if you like me, you like me. If you don't like me, it didn't cost you a dime to hang out with me. That's where I want you to come down. So find out what this is all about. I've got tens and tens of thousands of Omniacs who stay with me every day. They come for a reason. I assure you, you will appreciate what goes on live every day. Jeff, I will leave it in your hands from there, my friends. Traders, thank you so much for joining. I am very easy to find. Jeff will give you all the information that you need, and I hope to see you all at my website.
All right. Thanks, Oscar. Appreciate that. Some feedback on Oscar's presentation. You are a pretty freaking awesome kind of guy. Big O. I look forward to using the service. Go take a look at it. It's www.livewithoscar.com. We're going to take just a